Holy smokers, this ain't no dang jokers, folks. Oh my gosh, the bears are out. They are out. Noted Tesla bear says Elon Musk EV maker could go bust. And the stock is worth $14 a share. Oh, baby. Can't wait to see what they have to say, okay? Then we're going to get into Cathie Wood, or as somebody would say, Mama Cathie Wood, CEO Cathie Wood on Tesla. She's going to speak about a few other subjects, but obviously talk about Tesla, give her perspectives and opinions. Then we're going to listen to Guggenheim securities analysts on why they moved Tesla's stock price down to $122. That's where they believe it will be in the next 12 months. And then the last one up here, we're going to get into deep water. Gene Munster shares his bull case for Tesla. So we're going to have two bearish pieces on Tesla here today and two, I would say, probably bullish pieces on Tesla. So very even, balanced out as all things should be in life. And if you want to stay balanced in your life, you have to hit the thumbs up button for this video. Okay, very, very important. We need to have at least 10% of people hit a thumbs up. Be part of the 10% that is the good people. Okay, I appreciate y'all. Make sure to subscribe to the channel if you enjoy these videos. And also, pin comment down there. It's 11 days away, folks. Yep, everybody's going up on prices, and I'm saying I'm dropping it one day. The IRS won't give you a tax break, but I will. That's going to be April 15th, one-day sale. Pin comment down there to get access to that. Enter in your email. We'll send over that deal as soon as it drops. Access to my #1 course ever. See the moves I'm making in my Patreon portfolio each week. Plus, get access to that Patreon Discord chat. Okay? So, noted Tesla bear says Elon Musk EV maker could go bust, and the stock's worth $14. Oh, boy. Tesla could go bust, while with the stock could fall $14, says this hedge fund manager who's been shorting Elon Musk's electric car maker since 2020. So if he's been doing it since around, let's call it the beginning of 2020, he's in some trouble. If he did it since the end of 2020, then maybe he's okay, right? His comments come after Tesla reported 386,000 vehicles. We all know the number already, right? This is what he says, okay? This is really the beginning of the end of the Tesla bubble, which probably, arguably, was the biggest stock market bubble in modern history. I actually think the company could go bust. See, this is where folks lose all credibility, okay? This is where folks just lose all credibility. You could have a belief that Tesla, there's a lot of people that are always talking about, they've been talking about this for years now. Tesla's under $100, right? And plenty of those people, oh, Tesla's going to $50, $60. They've been predicting this for 2 years now at this point in time, right? It's going under 100. At least you have some credibility when saying that, right? You lose all credibility when you say Tesla's going bust, okay? Tesla's extremely profitable. They're going to be a lot more profitable down the road. But let's just say hypothetically, I'm not even accurate on that. Let's say they're no more profitable in the future. So do you expect them to start losing billions, tens of billions of dollars, blow through all their cash, never be able to get any funding? That doesn't even make logical sense. Okay, that's just preposterous, ridiculous, crazy talk. You can say that, but it's just what are you talking about? Okay, yeah, go bust. Okay, that's insane. Okay, pure insanity. But this is a sort of situation you get into in regards to how bearish the sentiment is, right? And I was talking to private group members last night, and I was saying, I have not seen, Tesla sentiment is so bad right now. I said, this is the worst I've seen Tesla sentiment as somebody that's been a shareholder of this company for a long, long time, right? This is the worst I've seen sentiment since 2019. Since 2019. Is it as bad as it was there? Not quite, but it's getting really close. I remember 2019. I remember the Gordon Johnsons and these other analysts and the things they would say about Tesla stock. I remember people saying the stock was going to $5. I remember people saying zero. It was going to go out of business, right? We're getting close. We're actually getting really close to that level of bearishness now. When you got people talking about company going bust, when you got people talking about the stock falling like this, what? This is insane. Okay, absolutely insane. He's predicting that the stock could go down. So here's more, right? He has taken a bearish Tesla call further, suggesting that the stock could fall to $14 a share. He said his call is based on an estimate that the company's full-year earnings per share this year would be $1.40. Okay, the company's going bust with $1.40 of EPS? He contends that Tesla is a no-growth stock. That's factual, probably right now. In the short term, long term, no. And should be valued at 10 times forward earnings versus 58 times forward earnings currently. So he doesn't want anybody looking to the future. growth, products, services, things like that. Sir, for great growth companies, which Tesla is one of the greatest growth companies in the market over the past 10 years, factually, right? People aren't that dumb. They realize, oh, this company is going through a slow period right now, sure, but they're going to get back to major growth, right? Forward earnings are an important, no one looked at NVIDIA as a growth stock a year and a half ago, right? It was a business in decline. And now everybody and their grandma wants a piece of NVIDIA stock. Forward, things can change very quickly in 12 to 24 months, I can tell you that much. Forward earnings are an important metric used by traders to gauge the value of a stock. If Tesla hits $14, that would represent around 91% downside from Tuesday's close. Tesla shares are already down well over 30% this year. I think, however, Tesla cannot be $14. If it falls under a certain level because of everything that's going on, it's going to go bust. This is a market we're in right now, folks, in regards to Tesla. I mean, it's pure insanity. And here's the deal, okay? Here's the deal. If you think about the bullish side, and you think about where things were at the end of 2020 and going into 2021, right? It was out of control bullishness in regards to Tesla at that particular time, right? And everybody was throwing $1,000, $2,000, $3,000 price targets, right? Retire on Tesla. I watched it all, right? Saw it all play out. Meanwhile, at that time, I was saying, I think Tesla could be in for a tough next few years, right? That obviously ended up proving correct. But now people are getting just as ridiculous on the downside when they start talking about $14, talking about going bust, talking about it's going to $50, $60, all these things that they're throwing out there. And I'm just like, y'all can be ridiculous if you want to be ridiculous, but you're going to look back 2 to 3 years from now and you're going to, have some clown makeup on, just like the bulls had clown makeup on that were talking about the stock's going to be $1,000 at this time, $2,000, $3,000, retire on Tesla, right? Alrighty, next one up here. ARK Invest CEO Kathy Wood. What's going on here?
A conference is hosted by Bruin Capital and Sportico. We've got a huge lineup of great guests all morning, including Washington Capitals owner Ted Leonsis, who's going to join us in just a little bit. And then in the next hour, in the first time he's ever been on CNBC, hedge fund manager, New York Mets owner, and of course the chairman and CEO of Point72 Wall Street veteran Steve Cohen will be with us, and we've got a lot of questions for him. But right now, we are joined by Kathy Wood, ARK Invest CEO and CIO, who's going to be speaking here a little bit later. It's great to see you this morning.
Great to see you, Andrew.
There's about 100 things to talk about, including Bitcoin and the distinction between what's happening with Bitcoin right now and gold and the like. But I do want to start on Tesla.
Sure.
Because we've seen the price action in Tesla, which has fallen on the back of worse than expected numbers. And I'm just so curious what you think is happening at Tesla right now, and whether, and there are some analysts out there that now have gotten bearish or starting to believe that we are at some kind of big inflection point.
Right. So I think a couple of things are going on. First, and Elon's been talking about this in the quarterly calls, the consumer is under pressure. There is, even though these economic statistics are coming out and saying everything's just fine, you listen to these company reports one by one, most of them do not sound like these economic statistics are suggesting. And I think Tesla's been telegraphing the high rates. They've been cutting prices to offset them, and they will continue to cut prices. So I think there's economic weakness.
So first off, that's a great point by her, right? You're seeing, the big techs have been fairly fine outside of Tesla and Apple, right? But you listen to a lot of the consumer-related companies. Listen to Nike, listen to Lululemon, listen to Darden Restaurants. Listen to these, companies that really cater to the masses, and their guides were not good. Their guides are not good.
There has been a bit of a backlash, I would say, and a pause, because you do have GM and Ford saying, wait a minute, we're going to take a pause here ourselves because we can't do this profitably. By the way, that's a positive for Tesla, to have the competition doing this, and Tesla's just going full steam ahead.
Yes. Boom. Great point by Kathy Wood right there. Phenomenal point. The competition is making the biggest mistake. They're not going backwards. They're pulling back. They're like, EV's not hot right now, so we're pulling. You can't do that. You're already so far behind Tesla as it is. If you pull back any, you're just setting up for, an earlier grave 5-10 years from now. So this is a short term. It looks like a great decision for all these different automakers to be pulling back. But 10 years from now, they're going to, then again, Are the executives of those companies even going to be around in 10 years? No, they're probably not going to be. Is a Ford CEO still going to be the Ford CEO in 10 years? And GM and Mercedes? Probably not. They think differently than a founder-led company, an Elon Musk type company, right?
So I do think part of it's economic. And you can use all these other excuses. But if that is the case, what's going to happen, we believe, during the next 5 years, and that's our investment time horizon, right. We think the cost of an electric vehicle, the average electric vehicle, is going to be cut in half. Woo! And Tesla's new block manufacturing techniques and technology, along with AI, are a big part of this.
How much, and you've been buying on this weakness,
well,
if you want to call it that.
So as we were selling when it was around 400 and 350, when it's been cut in half, down 60%, is not the time to run for the hills. If you believe Tesla is going to be in this, we also believe, the autonomous taxi network, certainly of the United States.
Right now, people are starting to think about Tesla again as a car company. I mean, I think that's what part of what's happened here in terms of the valuation cut has been people said at one point, oh, this is a tech company, right? This is an AI company. This is all sorts of things.
It's a computer
and then there were
on
always
wheels.
these bears saying, well, actually, guys, it's not that at all. It's a car company. Now, some people are saying, well, maybe it's a car company. What is it? And for the valuation to sustain itself and actually to move higher, does it have to be what you just talked about, a robo-taxi company, a AI company, and all of the above?
It epitomizes the convergence among technologies that we are seeing today. And the robo-taxi network is not an if, it's a when. It's already happening. Waymo is out there, proof of concept. So it is going to happen. And if you've tried version 12.3 FSD, you'll see that Tesla...
This is the full self-driving mode that we should say is not fully self-driving just yet.
Correct. But if you drive, if using it, you will find that it is becoming more precise, but also a little more aggressive, like a human being would be, instead of this, more cautious. Right. So I think we're getting there, yes, but it epitomizes three technologies: robotics. These cars are and will be robots. And of course, he's got the whole humanoid robot going as well. Energy storage. Autos in the future will be electric. We believe in 5 years, 75% to 85% of all sales will be electric. Here in the United States and around the world.
Wow, and people think I'm crazy bullish on EVs, right? Because I made a prediction that we're going to be in 10 years, a decade from now, we'll be near 100% of new vehicles sold will be EVs, near 100%. It won't be perfect, right? Let's call it 90, 95%, right? But that's over the next decade. She's predicting 70%-ish, like in 5 years, right? Now, how do you get there? You might say, is that even possible? That sounds crazy. And I understand. There's one wild card here, okay, that no one is considering. It's called gasoline prices. Oil price is actually fairly cheap right now. Right now, oil price is in the 80s, okay? Now, oil price hit a high back in, I believe it was 2008, of $140 plus a barrel, okay? Now, oil price has been low for really since that time. What happens? Look at the gas prices in your city. What happens if, hypothetically, oil was to go back to $140? What if it set new highs? What if it went to $170, $200 a barrel, $250? What do you think you'd be paying in your city for gas prices? You'd be paying $8, $12, $15 a gallon. That is a moment that people say, give me a freaking EV, okay? So that's a wild card that's out there. If you expect oil prices to stay low, under $100 for all of eternity, then EV transition happens slower. And these markets can be manipulated. So keep in mind, there's a lot of people that are very incentivized now for oil price actually to go up a lot over the coming years. Do you know who's all incentivized? Almost everybody. Europe wants to force, Europe wants more and more people in EVs, right? They're trying to get people in EVs. The United States doing the same exact thing. China doing the same exact thing. The Middle East wants to make a lot of money. Very powerful oil and gas companies want to make a lot of money. And they have pretty much the biggest lobby. Almost everybody is actually incentivized, especially after this election's over, so let's call it after November, everybody's basically incentivized to actually have oil price go up, because the more oil price goes up, the more and more people say, screw this freaking gas car that I'm paying $9 a gallon for gas, let me get an EV, right? Why do you think in California the adoption of EVs is so ridiculous? It's not just because it's the liberals, and no, there's actually a massive amount of Republicans in California. You might not think it, but there is huge population. Yet, who over-indexes massively when it comes to EVs? Californians. Why? It's not just because they want the planet to be good and blah, blah, blah. No. It's because freaking, have you ever paid for a gallon of gas in California? You might have had to take out a loan to get it. Holy smokers, that's no jokers, right? So the bottom line is, if suddenly you're paying $7.50 a gallon for gas in Houston, Texas, you're getting an EV. Okay? There's not even like a debate around that.
Right now, the pullback that we've had in terms of EVs and the adoption.
Think about this. Yes, because if we're right on what's going to happen to auto prices, the average EV will be in the $20,000 to $25,000 range. The average gas-powered car will be about where it is right now, or a little more.
When you have the GMs and the Fords and everybody else saying we can't even make these things profitably to begin with, let alone to do it at half the price.
And just think about this. Tesla's doing it profitably and cutting prices in the process. It's pretty phenomenal. Can I just go the convergence idea? I have one more. Robots, energy storage, they will be electric, 75, 85% in 5 years. And then artificial intelligence. This is the biggest AI project in the world. If NVIDIA is worth what it's worth, and we believe it's worth what the market's paying for. We think it's going to have an inventory correction out there. It happens regularly. Okay. You know, we've been through many inventory cycles. I have over the years with NVIDIA. So definitely going to see an inventory cycle as companies reassess, okay, wait, how do we get ready for this AI age? And there is a reassessment process. We're going through it ourselves. But if NVIDIA if its valuation is correct, this AI project has to work.
What is Tesla worth? If you were willing to sell it at $300 or $400 and you're buying it now, what is it worth in 5 years?
$2,000. We're in print on that.
$2,000.
Yes.
Let me ask you another.
2005 years? Kathy Wood? Kathy Wood? You're crazy. No. I wish. Okay, I wish. 2005 years? No. Could we get to the $500 to $1,000 range in 5 years? And the answer to that is yes. But two things have to happen. One, gas prices have to go up considerably from here, right? Oil's going to have to go to $120, $150, $180 a barrel over the coming years, okay? The second thing that would have to happen is you don't have an apocalyptic recession, okay? And so if that happens, I could see that all playing out, right? But yeah, 2005 years, I wish. I'll be a very, very happy camper if that happens with all my Tesla shares. But yeah, we got to be realistic. 500 to 1,000, I think that's much more realistic in the next 5 years, especially more toward that $500 price.
About that. It's down 60%. This reminds me very much of 2018-19. We're in a bit of a trading range, and we will be until more analysts, investors understand how provocative the convergence of these three technologies is going to be.
Let me ask you this. When you think about the Magnificent Seven, a lot of people have taken Magnificent Seven and now called it the Fabulous Four or the something else, but Tesla's not in it anymore.
Right.
Is that the right way to think about it? What does your Magnificent Seven look like today? I always think about your fund was a lot of the Magnificent Seven.
Not really.
No,
we have actually, if you look at the overlap of our fund with the NASDAQ or the S&P 500, very little overlap, maybe 5%. Tesla, Meta platforms. We think AI could be quite disruptive.
Kathy Wood now owns Meta? Really? I had no clue. I didn't know she also bought Meta. That's interesting.
Disruptive force.
Thank you, Kathy Wood. I appreciate that.
Is taking place that could dislodge some of the Mag 6. I mean, the GPT-4, for example. I don't have to go through Google anymore. I can just say, take me to a place where I can buy these shoes at the cheapest price for delivery, free delivery, in 2 days. You know, that's disintermediation. That's technology at work.
Alrighty. Next one up here. Let's go bearish. All right, why Guggenheim? I mean, Kathy Wood just took us about as bearish as you can go. $2,000 stock price in 5 years. Holy smokers, that was no joke. So now let's go bearish. Guggenheim Securities talking about 122 for Tesla.
They cut Tesla's target down to 122 and reiterate a long-standing sell rating. Joining us this morning is the analyst behind that call, Guggenheim director Ron Yessikov. Ron, it's great to have you back. You're not the first to suggest that maybe yesterday's numbers were not a clearing event. Why not?
He looks bearish.
Yeah, I think when you dig through the numbers, and we go through painstaking effort, I would say, to build our delivery forecast, the real implications of the downside yesterday were weak U.S. demand. Some form of supply on the Model 3, but mostly, versus our estimate at least, we believe it was Model Y demand in the U.S., where we've seen inventory build in the first quarter. And if our estimates are correct, U.S. units were down something in the range of 20 to 25% year over year.
I'm not getting canceled.
Even if we adjust for the Model 3 changeover, which has been well discussed, I think, at this point, the implications for that look far more structural than seasonal or cyclical in terms of the demand outlook. And then as you look to the medium term, I think beyond the first quarter, which is understandably messy at this point, structural issues in China, and then I think reason to be cynical or at least skeptical of the Model 2 and the ultimate end market viability of the Model 2 if electrification excitement gets pushed to the right. And in China, there's certainly already vehicles competing at that price point and taking considerable market share.
Right. So in order for the stock to bottom, is it about estimates for Q2 delivery coming down, or are we now talking about...
By the way, data just came out, and Tesla overtook BYD for number one in China. China, number one, despite all the negativity.
Most of the street having to come to grips with a negative year-on-year number.
Yeah, I think it's a great question. So we're at a negative year-over-year expectation this year. Our view is, and I think Tesla's starting to show this, that the demand response to price cuts has not been what they expected it would be.
Fair.
And the net of that is they're going to lean into advertising and accept the near-term implications of lower volumes. So I think it's more than the second quarter, to be clear. I think it's a full year reset of numbers and potentially 2025 as well, because they don't really have new products next year. We're about 40% below the street next year for EPS. And then if you have lower volume, you have lower cost reductions per unit. Gross margins look challenging, I think, for longer. And the free cash flow implications of negative volume growth or flat volume growth in auto are pretty unfavorable because of the way accounts payable and accounts receivable work with how Tesla pays their suppliers.
Sure. No, time to sell Tesla. I think the time to sell Tesla was several years ago if you wanted to get out of this stock. I just don't think now's the time to sell Tesla in 2024. I think now's the time to buy Tesla. We're looking at likely trough growth, trough margins, and trough EPS. All right now, like in this quarter we're in and next quarter, like trough everything in my opinion. It only gets better from here. Across the board, revenue, EPS, margins. So to sell when you're in a trough period, it's usually a very bad decision. To buy in a trough period is usually a phenomenal decision. Unless in 2025 you expect revenue to go down even more, EPS to go down even more, margins to go down even more. That doesn't make sense. Okay, so yeah.
What would change your mind?
I think interest rates could help. It's certainly been talked about as a material drag on the business. I think it's more narrative than actual the sole issue. Obviously, FSD attach rates post this trial period improving could really help the story and the narrative. I think we're skeptical, and history would show that connected services and automotive tend to not be widely adopted, particularly ones that cost as much as FSD does. But that would materially change the story. I think otherwise, I think we have energy, charging, automotive pretty well captured in our model. And I think the market is underestimating the kind of structural risks and sea change that's happening in China. BYD often gets talked about as an issue. It goes well beyond BYD today. I think BYD is...
Everybody knows that. Everybody freaking talks about China all the time. There's a horrible answer by him, by the way. What's going to change your, mind, attach rate on FSD and whatever else he said? There should be several things that change that man's mind. One, if Tesla starts growing deliveries again in the back half of the year, that he should change his mind then. If margins start going back up in the back half of this year, which they're probably going to do, he should probably change his mind, right? If earnings per share starts accelerating on a sequential basis as we tick on throughout the year, that should change his mind. Should be many things that should change that man's mind. That was just a bad answer, and that just almost proves that the man's just very, very bearish and is not even willing to really look at the other side, given that answer he just gave.
2 years ago as the issue, and now you have broader issues in China.
Right. The remaining bulls, Ron, still say and point to the minimal degree to which the core auto business is part of their overall valuation model. I mean, they are pointing to things like energy and even long-term AI efforts. Why is that not reasonable?
I think you can underwrite these businesses with the proper discount rates, is what I would say. I mean, even Elon has said that some of these are quote-unquote moonshots. I think the problem is people tend to underwrite these with far too much certainty over the long term and overestimate the end markets. Like I said, I think we have energy pretty well captured in our model out to 2032. FSD is tough because it's always been kind of on the come and it hasn't happened yet. We do have a considerable amount of value for FSD in 2032 as a level 2 system, but I think there's always overconfidence. I don't want to make the comparisons to kind of 1999. I was a child then, but it does feel like you're underwriting businesses that don't fully exist today. It was insurance 2 years ago, which Tesla's been clear now is not really a demand driver.
Right.
What? By the way, insurance, I think long-term could be a huge thing. But literally, what, 2032? Level 2? Come on, man. That man's just really, really bearish on Tesla. That's the way I'll put it. I'm surprised he's even got 122. I'm surprised he doesn't put a $22 price target on it. Holy smokers, that was... I mean, what crazy back-to-back videos to watch, right? Kathy Wood, who's just over the moon bullish, 2,000 a share in 5 years. And then you got that man who's just like... Geez, he was so bearish. It's just his price target was almost bullish compared to his commentary there. Let's get into Gene Munster.
A test of investor patience.
Not literally, though.
Managing partner of Deepwater Asset Management and Fast Money friend Gene Munster joins us now. And Gene, you personally are amongst those legions of investors whose patience will be tested. So what are you waiting for?
Indeed. Melissa, first, I am bracing as someone who's been supportive of what Tesla's doing and optimistic about where this company can go. I was just stunned today. I think that this caught me off guard. I was expecting it basically to be flat. Deliveries is down 9%. And the first question I asked, first order of business, is how bad is it going to get? The panel's done a great job of articulating there's going to be more negativity. I just want to put that in the context, is that going into today, the street was looking for about 15% delivery growth in 2024. If you look at the numbers they just reported and assume that they can grow deliveries 10% sequentially for the rest of the year, deliveries will be down 3% for the year. So this is probably more ugly than it seems even today. And given that change and look what happened in the stock, I don't think that's fully priced in. So I think, Dan, you've been clear about that $100. I don't think we're going to see 100, but I do believe that the stock is going to go lower because this is going to be what I think is going to be kind of the kitchen sink where you're going to see analysts. I had that job for a long time, throw in the towel and say that this is going to be over for a long time. So
this is why Tesla's having trouble getting to any of these sorts of prices everybody's predicting. Because you have the bulls that are very bearish on the short term, right? Short term, I'm really talking about this year. So bearish on the stock price. No one's expecting Tesla's stock price to go up this year, right? Bulls are, like myself and all the other bulls, we're bullish on the long term of Tesla, but no one's necessarily bullish on the stock price in the short term, right? Meanwhile, you got all these other people saying, oh, I mean, I read the comments. I see what's going on in X and you know, YouTube comments and stuff. Oh, I'm buying once it goes under 100. Oh, I'm going to buy at 80. I'm going to buy at 60. I'm going to buy when it goes under 120. All these sorts of comments, right? Everybody really wants to buy Tesla at the end of the day. They're just like wanted at like this perfect price that they have made up in their mind. And most of the time you don't get that perfect price. Every once in a while it can happen, but usually you need a company to be failing at a particular time while simultaneously the stock market's getting destroyed. For instance, Meta was a perfect example of that in 2022. NVIDIA was also another perfect example of that. Numbers were going very bad, all simultaneously while the NASDAQ went down over 35% peak to trough. So you need those two factors. So you need a super substantial NASDAQ drop to get Tesla to all these magical prices that everybody's making up in their head. And that's why the stock is holding so strong, because at the end of the day, you really look out there and you're like, it has unlimited demand in terms of how many people want to buy this stock. And every price, because you got to understand, if somebody's got their price made up at 80 and I'm going to buy it at 60 and I'm going to buy it at 120, I'm going to buy it at 100. Well, there's also people that are like, I'm going to buy it at 140, I'm going to buy it at 150, I'm going to buy it at 160. Oh, if it goes under 165, right? And so that's what makes it so dang hard to get this stock to fall to any of these, epic prices that everybody's talking about, right?
I want to start there. Second is the bigger picture. And I think, Tim, you were talking about just, this EV and the EV picture. Just to frame that in, that's a $2.5 trillion market. What's the auto market on a yearly basis? Eventually, of course, it's going to go EV. Panel appropriately talked about what's the timing of that. I think it's going to come faster than most people think, even though this is such an ugly day on the delivery numbers. And the reason is that I believe one of the biggest factors in this horrible number was that there was so much excitement around EVs. People who typically buy a car every 5 years probably moved it forward and bought it 3 years, pulled a lot of demand in. I think eventually that just starts. I'm guilty of being too optimistic, but I think eventually they get to the other side. And one final thought, Dan, you talked about FSD. I agree that is an important piece here. If anybody's tried FSD, the beta that they just put out last week, it is a step function better than what they've ever done. And so I think that is going to come probably in the next year or two, and I believe that that's going to be another catalyst. So that's where I'm at.
What can they tell us, if anything, in the next quarter or two that can sort of, I don't want to say solve certain issues, but for instance, if they come out with a lower cost model, does that solve for some of the weakness that they will see in China and address that next wave of growth that investors are looking for? Is there sort of a couple of things that they can do that can make the story a little bit better?
So you've got two camps. You've got the people who believe, and the reason why the stock's not down more today is because that camp still exists. The reason why this still has the market cap it does is because that camp still exists. They're not going to be influenced probably by another couple punky quarters. That won't influence it. The people who are skeptical, there's nothing that Tesla's going to say over the next, when they report their quarter on the 23rd, that's going to get those people more optimistic. But as an investor, I think you need to fast forward to, I'm already thinking about mid-2025. And at that point, we're going to have some really easy comps. I mean, this is a down 9%. March of 2025 is, we're going to start to get easier comps. I think that starts getting...
That right there, folks, is a freaking great point. Great point, because I haven't talked about that. I appreciate when somebody brings up a point on something that I haven't spoke about. Comps next year. Oh my gosh, right? We know Tesla this quarter's rough. Next quarter's probably going to be rough as well, right? Well, for next year, the comps are going to be cake in terms of deliveries, in terms of margins. So do you know the sort of growth they'll be putting up in the first quarter, second quarter next year, right? Cybertruck's going to be fully ramped by then, right? And so the margins the company will start putting up, the revenue growth, the deliveries growth, it's going to be pretty darn impressive. And that's without even the $25,000 under 30K vehicle being in the market by that time, right? That's probably more of a end of 25, 2026 type time frame in that. So that's even without that. So that's a great point by Gene Munster, and just another thing that will be very bullish for Tesla, I would say, next year.
Reflected in the stock probably mid to late this year. So that's kind of the time frame. It's going to be rocky for the next several months. I don't think there's much they can say, Melissa.
Yeah, appreciate Gene Munster there. All right, guys, hope you enjoyed today's video. Once again, pin comment down there to access the one-day tax break, jailbreak sale, my #1 course ever. See the moves I'm making each and every week, buys and sells in my Patreon portfolio, plus be a part of that Patreon Discord chat. It's 11 days away. Pin comment down there, enter in your info, and we'll send over that deal so you get access to that. When that does drop, it's a 24-hour only sale, okay? Much love and have a great day.